So today what we're really going to do is kind of highlight what are the three critical capital opportunities available. And we're going to put them in order in terms of what are the most valuable for your business to what is the least valuable. And of course, some you'll be able to apply for, others, you might not fit. So essentially try understanding what fits for your business needs and then be able to take that information. As noted, we'll be sure to share all of this, including the decks, some links, and a one-pager after this call, and you'll get a full replay of this webinar as well. But I kind of want to dive in because this is probably the heaviest deck and slides we're going to walk through because there's so much information. So yeah, let's just kind of dive in real quickly. Move this to full screen. Perfect. So just quickly about me, if you've already been on here, you've probably heard this. In short, like my background's more from venture-backed startups. I support both as an operator, investor, and advisor. Essentially for me, this is really relevant because most of my businesses are early stage businesses, so they apply especially for a lot of these SMB loans, at least for the businesses that are here in the US. So essentially, I've been trying to gather all this information and be able to relay this to my own portfolio. And at the same time, really, we're going to tailor this for the small and medium business community here locally in Sacramento. So with that kind of being said, I just want to highlight a little bit about our team and a few of the cool individuals who are part of this. So one of the big people I want to spotlight here is Kyle Middleton. He's the founder and owner of Granite City Coworking. This is one of the more unique spaces in Folsom. It's the first co-working space specifically built to support local entrepreneurs and early stage startups. It's 10,000 square feet, over 50 different startups, and it's the main reason why I'm here in this area as well too. What's really exciting here is that we're really trying to build an innovation hub within Folsom to support with more digital and technology-based startups that are founded and started here. So Kyle's been a huge factor in that front, and Granite City Coworking is located right off the historic district. If you want to learn more, check out granitecitycoworking.com. We have a lot of interesting discounts specifically for students and new startups if we can support in any meaningful way. Kyle's really excited to talk, and Kyle's one of the three core sponsors of this entire series. Alongside Granite City Coworking, we have the Greater Folsom Partnership and an organization I'm involved with, which is Tribe. So with that being said, let's get into the fun content. The CARES Act and how it applies to all small businesses. Unfortunately, I have to start with a disclaimer here, the disclaimer is really simple. A lot of this is still subject to change. Specifically, when we're going to be talking about the primary program of interest for all of you, it's the SBA 7A loan program, or also known as the Paycheck Protection Program, or also known as PPP. You're going to hear a lot of crazy acronyms. This is essentially how the government is, but I'll try to ensure that we follow through. I'll commonly refer to this first program as PPP. It's kind of just really clear and understood. The interesting thing about the PPP is that this is the most valuable element, but it has not been actually shared in terms of specific guidance yet. So a lot of the learnings you're going to get today are essentially taken from the 882 pages of legislation. And sadly, I read almost 200 pages of this legislation, so I at least have somewhat of a decent understanding. But the other important thing to understand is there's still gaps, there's still follow-up questions, there's still a lot of debates. So I'll aim to call out all of these, but really give you the core facts and then share kind of where that dynamic element will be. Secondly, we'll walk through the EIDL, or the Economic Injury Disaster Loans, also known as SBA 7B. Again, you'll hear quite a few of these, but we'll try to keep them clear. I'll commonly refer to this as EIDL. This is something that's a lot more interesting and available now, but this is a non-forgivable loan, but it has really beneficial rates, and it has a much larger loan amount that you can apply for. So this is kind of the second tier that I'd be recommending everyone to be looking at and applying if it fits your business. And then lastly, if neither of these fit, there's also something that is valuable, which is the Employee Retention Payroll Credit, which we'll hit kind of briefly and really quickly as well. So that's kind of what this webinar is going to be tackling, is these are kind of the three most valuable tools for every small business to be looking at and applying for. As I note with the SBA 7A Paycheck Protection Program, PPP, now only going to be referred to as PPP moving forward, the guidance nor official application have been released publicly. It's important to note that they're aiming to release that this Friday. Again, it's an aim, it's not a guarantee. The other thing to really recognize, everything is moving really fast. Essentially, the CARES Act was essentially signed in and applied last Friday. So we've only been working essentially with 3 full business days to this point of getting it fully funded and fully kind of implemented. The other thing to note is that the primary organization on the government running this is the SBA, the Small Business Administration. And this is unfortunately one of the lowest funded organizations in the government agency. So they are resource strapped. They're incredibly valuable, incredibly helpful, but it's just also important to understand that we're kind of in unprecedented times. This is going to be a huge volume overload to one of the smaller agencies. So just you could kind of paint the picture there, or maybe there are going to be some stop and go, some delays, some kind of gaps. And that's just really important to recognize so you're fully transparent in the process. Again, all these details are still subject to change. There's numerous groups lobbying against certain provisions within this. The entire startup community is right now trying to lobby against one element, which is called affiliates. Also, if you're a part of a franchise, you might fall under this affiliate structure. So we'll talk through what that means, but in short is that, if you are a venture-backed startup or a franchisee, there might be limitations on what can actually apply to you because your overall organization is over 500 employees, and that's kind of the affiliate structure. So in short, you're going to see a lot of these really small edge cases. We're going to do our best to hammer in, but the goal of this conversation is to focus on that 80 to 90% of core information. And we hope to follow up directly with you if you have edge cases. So the big thing to note is that if there's a question that pertains specifically to your business, please write it down while we're doing this conversation. You can share it with the chat, but also we're going to share an email at the end that you can follow up. And we'll be doing 24-hour email turnarounds to make sure we can answer to our best of our abilities for your specific business as well, too. So let's get into this. Why do we start with the Paycheck Protection Program? Well, the best thing about this is the forgivable loan, right? If applied correctly, this is essentially goes from a loan to a grant. And this is, of course, the highest value for any small business today. So essentially, the Paycheck Protection Program was initially implemented to help businesses keep their workforce employed during the coronavirus crisis. Essentially, that's really what the goal is intended, is they want you to keep your employees during this time. What's great here is that SBA will forgive loans if all employees are kept on the payroll for 8 weeks and the money is used for payroll, rent, mortgage interest, or utilities. We'll talk through a little bit more about that, but that's what's really great here is that although they'll be calculating it off your payroll, and we'll talk through what that calculation looks like, you can actually use it and apply this loan to a lot of different areas that are meaningful to your business, including rent, which is going to be one of your largest reds, your utilities, your mortgage interest, and of course, payroll. So there's a little bit more flexibility in its use case, but it needs to be within these boundaries. If it is not utilized, if the capital is not utilized within these boundaries, it will not be a forgivable structure. It will then move to a loan structure where there are terms on that. So what's great about this is that you can see a lot of this information directly from the SBA. If you go to sba.gov and there's a link there, we'll share this afterwards as well. You can kind of get the update right now directly from the SBA on what they're expecting. So, the big takeaways here is we start with the PPP because this is essentially a grant, right? No small business wants to take on more debt. So this is an opportunity for you to have a pretty large cash injection that can be forgiven if utilized correctly. So let's get through the details on what that looks like for your business and how it applies. So who can apply for this, right? As mentioned, it's any small business with less than 500 employees. The other great thing is it works for sole proprietorships, independent contractors, and self-employed persons. So it's really, really wide funnel in this approach and one of the few policies that's also done that. The other thing to note is you must have been in business by February 15, 2020. This is really unique. Usually most of these loans require like 1 year history back. In this case, they're doing it for any company that's been incorporated since February 15. So if you're able to get to that point, right, again, this means almost every business qualifies. If you're an early stage startup or you decided to start your own kind of business on the side, you actually now qualify because it's only the February 15, 2020. Essentially, and this is where a little bit of the vagueness comes in, is that you must exemplify the loan as necessary in order to support your ongoing operation. Specifically, you have to show them how COVID-19 has impacted you. It's usually pretty easily by, if you're a restaurant, you just look at your receipts, right? Being able to showcase what's your orders, what's the drop off, etc. If you run like a small agency, right, you're going to showcase contracts lost. but you really want to be specific here, because the more documentation you can provide, the better the chances of your loan being fully forgiven. And that's what's really important here, is that you're initially granted a loan, but you need to be able to showcase that you utilized it correctly, you have good exemplifications of its use case, and then it will then be forgiven at a later date. And we'll talk through what that timeline and process is. But the great news here is probably everyone on this call qualifies to a certain extent. Next, as noted, what costs can the loan cover? It's quite a bit. That's what's really cool here as well too. The loan proceeds must be used for the following in order for it to be forgiven. Anything in regard to payroll, and that includes employee salaries, hourly wages, even cash tips, which is really unique as well too, paid sick or medical leave, and health insurance premiums, right? So that's essentially your payroll bucket. So the key here is, of course, better documentation here as much as you can on this front will be critical. Next, you want to also understand that existing interest payments on mortgages, right? Great, if you have one, any interest payment on that, you can apply it for your rent payments and or leases, depending on what your business is and what your structure is, and also utility service agreements. The one thing to note here, and this really applies to maybe some of the businesses that have high performance earners or sales oriented individuals, is that it is capped at an annual rate of pay of $100,000 per employee. So if their compensation is over $100,000, you cannot include anything over 100K. You have to comp it at that cap. That's important. So specifically, if you're a loan representative or have and have been killing it for the last few months, essentially it doesn't matter if you're on track to make 250K. What you could only apply for your business will be up to that 100K. So it's important to note that. The good thing is that this is more for the smaller edge cases and still would allow you to usually put most of your employees under that. But just note that cap exists. But essentially, it does cover quite a bit of the cost, and that's kind of what's really exciting here in this structure as well too. So moving forward, right, how much do you qualify for, right? That's the most important question. Well, they're utilizing a very, very simple structure for this and calculation for this. It's essentially 250% of your average monthly payroll expenses. So if you were a business that had started in January 1, had existed since January 1, 2019, what they would essentially do is take your entire 12 months of payroll history and average that, right? With that average on a monthly basis, you times that by 2.5x, and you essentially now have, right, a somewhat of a calculation on what you're eligible for and what you qualify for, right? In case you were a business that has just started this year or in the last few months, they will essentially take an average of your current payroll. And again, there's a little bit of vagueness here. They're still trying to provide guidance to lenders on this front, but essentially the more documentation you can provide on what your average monthly payroll expenses are, especially historically from the last 3 months, the better your chances are on getting this. So essentially, you can now look at your numbers and look at your average monthly payroll, times that by 2.5, and you essentially know what your eligible loan total is. So the important thing to recognize here is that the application of the loan, right, can go to a lot of different things. But how they actually calculate it in terms of what you're eligible for is purely by payroll expenses. So you can see in that previous slide when I broke down what everything goes into payroll expenses, that's what you want to roll up and then times that by 2.5x, right? So there's a general calculation of what is your average over 2019, find out what that average is of your payroll expenses and times that by 2.5x. If you're a new business or essentially someone who started now, try getting as much history as you can and you'll get a little bit of guidance from your specific SBA lender you work with. So, basic math here is that, if your monthly payroll expenses total $50,000 in average in 2019, you're essentially now eligible for $125,000 forgivable loan. So what's important here to understand is that, it is based off your historical numbers. This is something you really cannot juice. It's not something you can really overstate. So you really need to just make sure you're documenting everything and make sure you take into account every single cost that is attributable to payroll. And if you can do that, you'll be at a point where you'll have a very clear opportunity to talk to that lender and get a clear return on what that is. And you'll know exactly what you're eligible for. The great thing as well too is if you do these numbers now, you then know what to expect. So you can essentially build against that on what is going to be eligible and what is going to be forgivable. And essentially, right, this is all forgivable if you use it for that core structure we talked about earlier. So this money, you know, if you're getting this $125,000 hypothetically, it could be used for payroll, rent, you know, utilities, etc. But it must be within that course of, and you need to ensure you're applying it directly to that, and then it will be forgiven. So with that being said, what are the loan terms and what are the details? And again, this is a little fluid because as I mentioned, the PPP is still, the guidance is still coming out. SBA is still trying to understand it, but we can share what we know today, right? So A, the loan will be fully forgivable if the funds are used for payroll costs, mortgage, rent, and utilities, right? That's what you want to focus on, and you want to make sure that if, when granted that capital, you're applying it in that. The other thing to understand is that amounts that are forgiven are not included in gross income and are not taxable. So again, something super important for the following year, right, as you move forward. The other great thing here is that all loan payments are deferred for 6 months. So that's essentially, right, the period is June 31st. So it's essentially deferred till December 31st. So you essentially should have no payments this year, right, if applying for these loans, which is really important to recognize as well. The other great element here is no collateral, no personal guarantee, and no fees. There's no cost to you to apply for this. And that's really, really important because it means that all of you should, right, if you can do that. Sorry, one second.
That might be part of his hesitation.
Mm-hmm.
Maybe I would be listening to these calls here.
Sorry, for some reason I'm unable to mute everyone. Hi, sorry guys. If you can you mute yourselves? Because we have quite a bit of feedback here. And for some reason, my mute button is not working anymore.
How do you mute yourself?
If you look on your video on the top right, you should be able to see a little mute button.
Apart.
There's cardboard, there's reading nature objects, there's
I apologize for this.
Instead of sketching it, it's taking a page apart.
Oh my God. Okay. Well, give me 1 second, and I'm going to have to, unfortunately, individually mute everyone, which is a very unfortunate process here.
Yeah.
Okay.
Yes. Yes. Yes, Daddy.
Yeah, no one's there. The mute button isn't working.
Yeah, I'm unsure why. It looks like just a small technical error with Zoom, but it looks like we're getting there. Hopefully that should be good. Sorry for that really quickly. So in short here, guys, really getting back to this is, right, no collateral, no personal guarantees, no fees, right? So everyone should be applying no matter what, right? You want to see what the opportunity is, what you can get. The only thing you lose is your time in that application process. There are no other costs, no other liabilities as well. The other thing to really understand as well, and this is another important guidance that has just come out from the SBA in the last few days, is that due to likely high subscription, right? There are over 6 million small and medium businesses in the US at the moment right now. They are now noting at least 75% of the forgiven amount must be used for payroll. So that is what is one of the new guidances that are coming out, and we're hoping to get more details on that by Friday. And again, this is important because depending on your costs and what your structure is, there might be scenarios where your rent takes a much larger size of that structure too. So again, something to note, and especially when you start building out your models of how you'd apply the capital, you want to ensure 75% of the forgiven amount must be used for payroll. We'll do our best to also update you guys that on Friday as well. So what else do we have here? So for the elements that are like essentially not forgiven, if you choose to use the loan in a different manner, right, the interest rate will be no higher than 4%, which is a pretty good loan rate in this kind of industry, and will also be very close to what the economic EIDL loan will look like as well. And the loan term is up to 10 years for the amount not forgiven. Really what you want to understand here is that whatever capital you get through PPP, only put it to the areas that are forgiven. That is the clear rule and mindset here, because then you'll get that all forgiven on your guys' behalf. And I think that's what's really important when you kind of look at, the structures and opportunities that are being provided. But more importantly, what's great here is that if you execute correctly, right, you're taking on no other liabilities to your business, which is, again, incredibly important when we're looking at a cash strap kind of structure. Outside of that, right, what you also want to understand is that forgiveness will be reduced if your full-time headcount declines. So what this means here, right, is that you cannot reduce your headcount over and over again over the next 6 to 9 months consistently and not expect to have some of that loan then have to be paid back. And again, this is still a little vague. So what does this mean? Essentially, what they're trying to do, as we talked about at the very top of what the mission of this is that they're trying to ensure that you employ as many people as possible. So the more you do and the more you maintain your head count, the stronger your likelihood of forgiveness is going to be. If you do need to do wage decreases, the threshold on that is don't do anything less than 25%, right? If you do anything less than 25%, you essentially can then have some of your loan not be forgiven. So again, this guidance is going to be coming out more clearly over the next 5 to 7 days. And this is the area where you want to kind of be focused on. The other thing to understand here, and like kind of more important for everyone here, is that this is not, the loan forgiveness is not automatic. There will be an application. So it seems very clear and the intent is very clear for this to all be forgiven. But essentially, right, you need to be documenting as best as you can, right? You need to be showcasing that everywhere you applied the dollar you got through a PPP loan was applied to their core areas. The better your documentation, the higher likelihood it's going to be for it to be fully forgiven as well too. So again, it's just something to recognize as individuals are trying to understand this entire process. It's those who document well are going to do really well in terms of getting the majority of their loan forgiven. Outside of that, the only small note here is that the CARES Act provides complete loan deferment of principal and interest for 6 to 12 months. So again, if you're taking this loan, you're not worried about payment anytime soon. And of course, your primary intention here is that if you do take this loan, is to utilize it for all the forgivable circumstances and use cases. So that's really where you want to spend a lot of your time, is knowing those costs, knowing how you apply, and knowing that structure. So with that kind of being said, there's probably a few other follow-up questions that come into your mind, and especially for those who are restaurant businesses, right? This is the most common question I'm getting. What if I laid off my staff or reduced salaries already, right? Well, here's the great thing. Borrowers that rehire employees and remedy reduced salaries by June 30th, 2020 will not be penalized for having a reduced payroll at the beginning of the year. So meaning if you laid off staff right now, but you start making the intentions to rehire them back for June 30th, 2020, you will not be penalized or decline for your ability to have a loan. They will give you kind of essentially your maximum forgivable loan based off the average monthly payroll, assuming you are fully healthy. Of course here, right, and here's the reality, as even if you were to get this capital, the truth is that would you want to rehire 100% of your staff? Probably not for every business, right? You can't even support that staff. So you need to think through what those numbers are so you could recognize, A, what am I still applying to be forgiven? What are my liabilities in terms of the delta of my full payroll and my current payroll? And make sure that you walk that through with any of the lenders you speak to so you can have a better understanding on how you could best maximize your potential loan capturing through the PPP that can be forgiven, right? But the great thing here is that if you did reduce and you now are able to bring on, once this capital comes in, the great thing is that you could probably be full staff by June 30th. 2020, and that's the critical date. But we all know COVID-19 is still an unknown. We still do not understand its true impact to our economy. But the hope is, and this is what the PPP and the CARES Act is structured, is that by June 30th, 2020, we'll be back to full power. So your goal is to remember this date. because this is the date that is essentially what your full loan maximization can be based on. And that's kind of what's really interesting here and really applies to each and every one of your businesses as well too. Again, any reduction in force or a RIF not remedied by June 30th, 2020 will also impact the loan amount that is eligible for forgiveness. So what does this mean? This means that, say you apply for the PPP loan with your average monthly payroll, assuming a 50-man workforce, and it costs you $200,000 a month, and that's what you got your loan based on. But if you do not hit that workforce by June 30th, 2020 with a similar cost structure, you are essentially responsible for that delta, and that delta would not be forgiven, right? And again, we could walk through, and we'll do this on Friday, very specific models of what this looks like, and we'll give you a little bit more guidance. But this is the important thing, is that you need to understand is, what is my historical payroll, so I know what I'm eligible with the 2.5x on that. I need to understand this key date of June 30th, 2020, as that is my go-to date in terms of getting my force fully brought back on, right? And if you can do that, you essentially then would be in a very good position of having the entire loan forgiven. But let's be honest, here are some of the issues with this. You're only getting 2.5x your payroll. And this is essentially right now much longer than 2.5 months away too, to a certain extent, right? Is that, can you match that correctly in the 2.5 months all the way to June 30th, 2020? Maybe not. So we have to assume the health of the economy coming back up, that limited impact of COVID, and these are the unknowns, right? And it's just something for you to make sure you acknowledge and not take for granted. So what's great here is that if you've laid off, you can still react. June 30th, 2020 is your date to focus on. When and where do I access these loans? Well, it's kind of all over the place, but right now the current guidance is these should be available on the SBA website or available for lenders this Friday, April 3rd. This is when they've essentially noted that they are able to then start taking on the PPP loan structures for small businesses and sole proprietorships. And if you're an independent contractor or a self-employed individual, April 10th is your date, right? They're just trying to make sure that they can build a seamless onboarding. Essentially, local participating SBA lenders, banks, or credit unions will be able to process and approve on the same day, according to Secretary of Treasury Steve Mnuchin. Again, as talked about at the start, SBA is an organization that is right now fully overloaded, right? The question is will they be able to even get to this if they unlock it by Friday? If you ask different loan experts, they'll give you all different answers. We've been hearing that it could be 1 to 2 weeks additional delay. I've heard from a couple people that it could be even up to a month. So essentially here again is that although these dates are somewhat stated by great sources, we also have to understand there's limitations in the infrastructure. And that is something you also need to acknowledge as you go through this process. So right now, the current guidance is that capital will arrive within 1 to 2 weeks of approval. I hope that's the case. That's the current assumptions we're working on, but we'll be getting this updated guidance as well. The other great thing, and we'll be following up as well on Friday, is that the Greater Folsom Partnership is already aggregating all the local lenders who will be able to support this as well. And you'll be able to have those conversations directly. So my honest answer is when? I hope by this Friday, but realistically blended over the next week. When will the actual capital come to you? It could be anywhere from 1 to 4 weeks in terms of it actually landing in your account right now, based off all the numerous variables we see today. Essentially, what you want to be doing is you want to be proactive and be able to engage as soon as these are ready and the applications are ready to go. So what's the checklist? What do you need, right? And how do you be able to really be able to be prepared for this? Essentially, right, it's having clear documentation from third-party sources that essentially validate all those costs we talked about. So you should go back and find your historical payroll documentation with all those costs very clearly. If you do use a payroll software, these are pretty easy to pull out. If you do utilize a tax or an accountant, these are things that these individuals can easily pull together. You should go get your health insurance and bill plans, right? You should get your full rental and lease agreement. should get your utility bills agreement, your mortgage payment and interest, all your documented medical and sick leave that you've granted on behalf of your employees. And of course, just make sure you have good standing certificates and business certificates as well too. And this is just the baseline, but you could start collecting all of this now. Because again, this is the documentation that is going to essentially be necessary when you talk to a lender out there and they're going to be calculating on your behalf. So the key advice I can give you today is start gathering all of this. There's no such thing as too much information here, right? If you have additional documentation, bring it in, but try to be very clear and make sure it's applying to what those specific costs are and what the specific applications are. And especially when it comes to all your payroll, wages, benefits, and taxes, and especially health insurance premiums as well too. So definitely start tackling this today. You should be putting this into a physical folder printed out, a virtual folder as well online. So you have all of this and you can be able to share this with all the respective parties once that communication opens up. I'm gonna keep it real essentially and give you my honest advice and listen to what I share with everything, right? As you can see, there's still a lot of details that are still in flux, right? We're still waiting on guidance and you should recognize that this is part of the process, specifically when it comes to the PPP. Really on your front, you wanna wait on the official SBA guidance, which should hopefully be coming out, later this week, worst case, early next week. Truth is, expect delays as the system is not built for this type of volume. This is incredibly unprecedented. This is a stimulus plan where every small, medium business must apply, right? Because it's taken us all, off our essential kind of pedestal. So with that, the SBA is really not prepped for this type of volume, and they're doing the best they can, but you should expect delays. Apply with very detailed and precise numbers. You should know these numbers on the back of your hand, especially with those first few slides of what I talked about in terms of what applies for the loan. You should know all of these, know all the details, know all of your services. The better you know this, the more successful and maximization you'll have on the loan potential when you talk to a lender. Be proactive and up to date, right? Whether it's joining webinars like this or just kind of going to SBA.gov. SBA.gov is still always the best resource right now because they're the ones doing the applications. They're the ones providing guidance to lenders. They're the ones essentially setting the rules. So whatever their timeline is essentially will be the timeline for all of us. A lot of these details, some of it comes directly from the SBA. A lot of this does come directly from the CARES Act. So our goal is trying to get ahead as fast as possible. And that's kind of what the goal of this webinar is at the moment. Essentially, don't take it for granted, right? Like you need to understand that you need to do all this work and you need to make sure that you stay precise and up to date so it's forgiven, right? The last thing you want to do is take a loan expecting to be forgiven and you don't do the work and you now have a 6-figure loan with a 4% interest that you have to figure out how to pay out. The good thing is the terms aren't awful, but the bad thing is you have a clear opportunity to get these forgiven, and that is the opportunity in PPP, right? This is why you want to start with this out of all the plans, in my opinion, because it's the highest ROI, highest value, and highest impact to your business. So this is just my honest guidance and feedback right now and where we're at. Again, we hope to keep you up to date on all the details as they come through. So that was everything PPP. That was quite a bit, but what we want to now talk to you about is the essential second biggest area where you should be applying for loans, and that's the Economic Injury Disaster Loans, or EIDL, or SBA 7B, but we'll commonly refer to as EIDL moving forward. Really what you want to understand is PPP's biggest value is that these are forgiven, but these are low volume, right, in terms of the total principal amount you can get, because it's based off a calculation of 2.5x your payroll. So that's essentially your ceiling on that front for PPP. What the great thing about EIDL is that it has a little bit more leniency and a potential larger principal you can grab for your loan amount, but it's not forgivable, right? This is a true loan on good terms and good periods. So that's how you want to think through these two right now. And the other great thing about EIDL, it's available technically now. You could technically apply for it on the SBA, and we'll talk through that at the moment right now. So what is EIDL? EIDL can provide up to $2 million of financial assistance. Actual loan amounts are based on some amount of economic injury to small businesses or private nonprofit organizations that suffer substantial economic injury as a result of declared disaster. It's quite wordy, but in short, right, the key things to take away is $2 million ceiling, Essentially, it's pure financial assistance if you've been impacted by this business, and it applies to essentially all small businesses as well. The great thing is, if you go to covid19relief.sba.gov, there's essentially a pre-application is probably the best way to call it. It walks you through all the details to see if you qualify and gets you in the queue so that you're ready to receive the information. So again, you should just be applying, right, to be able to understand your optionality here. This is already live on the SBA website, so you can essentially get a little bit of ahead and get a little bit of the information there as well too. What are the quick understandings of this? Who can apply? So the date's a little bit different. It's January 31st, 2020, but again, amazing. It's not 1 year back, it's only 3 months back, right, essentially for us. So if you were in business on January 31st, 2020, you can apply. Again, any small business with less than 500 employees. And this is kind of where the vague language comes in. Borrowers must have suffered substantial economic injury as a direct result of the declared disaster being COVID. Again, what is substantial economic injury? I mean, if you're a restaurant, it's pretty easy to note. If you're a direct like retail brick and mortar, pretty easy to note. So again, you got to recognize there is an incredibly clear guidance on how this is defined. So because it's vague, you have to do everything on your behalf of your business to highlight what is that economic injury to you, right? Essentially, the better you do that, the better you highlight it, the higher likelihood of a larger loan and principal amount here. These are applications made directly to the SBA or SBA approved lenders, and we'll talk through who those are and what those partnerships could look like. Biggest key here, right? There's no loan forgiveness on this, right? You're not applying this for loan forgiveness. There's a small carve out for up to 10,000. We'll talk about that. But the core principle, this is a loan. You're getting a loan on good terms, and you're getting a loan on flexible terms as well in terms of timeline. So what can the loan be used for? This is kind of the same element here. It's still pretty wide funnel in terms of the use, and there's a little bit more vague language that you can apply it to a lot of other areas. So the first vague language you get is working capital to carry the business. If you talk to a lot of accountants or tax representatives, this could be anything, right? Working capital to carry the business. Technically, this could be advertising to a certain extent. So what's interesting here is that if you can prove that it's working capital that is improving the business and carrying the business in a meaningful way, you can then utilize the loan proceeds for that. And of course, it all comes down to all the same basic stuff we talked through in PPP. It's payroll, your accounts payable, your fixed debts, providing sick leave, and rent and mortgage payments, utility payments as well too. So what's great here is it's pretty wide funnel here in terms of what you can do, but there are some clear guidances on what you cannot use this loan for, right? You cannot refinance previous debts, right, prior to COVID. You can't repair physical damage. Interesting. I don't know what physical damage has existed, so I don't think this applies as much to us right now. You cannot use this for tax penalties, in my unfortunate spelling there. And then you cannot use it for dividends or disbursements to any of the owners of the business as well. So, it's pretty straightforward in its language. There's a little bit more maneuverability in terms of where you can apply it, specifically that working capital to carry the business. The key advice here is that every loan lender that you might talk to will have a different definition on this, and hopefully better guidance will be coming through. So you should be sharing that and understanding what applies as working capital. So you should be doing your inventory of everything that applies to working capital on your behalf. And from there, the big key, right, and to understand is that you should be presenting that to any of the lenders you're talking to at the moment. And then from there, it's their discretion, right? That's the key, is that these lenders are the ones who are going to be looking at this. They can make the decision. Your goal is to present as much as you can. What are the core terms here? As mentioned, it's up to $2 million. The interest rate is a little bit lower on, compared to what the PPP is in terms of the unforgivable element. The PPP was at 4% when it's unforgiven. Here, it's 3.75% for small businesses. Also, if you're a nonprofit, it's even lower. Off the top of my head, I believe it was 2.5 or 2.25%. The great thing here is that the length of your term is not to exceed 30 years. But again, this is where some of the vague language comes in. This is somewhat up to the discretionary of the lender in terms of what is your ability to repay this. So they might change the terms, or they might offer you different terms that are blended between 10 to 30 years to a certain extent. So this is not fixed. This is just more the ceiling, right? It can't exceed 30 years. but it potentially could be less depending on your business's needs and your ability to repay back. The good thing here is that if you're doing anything less than 200,000, you've waived all personal guarantees, right, for these loans. But again, another vague language that's coming up is that collateral could be required for loans above $25,000. There's no other guidance outside of that. You know, it could be required. So the element is what does that mean? What does that apply for? Are there different types of businesses that are vulnerable to this? We're still unsure on that front, but it's something, again, as a prerogative on behalf of the accredited SBA lenders on what they can kind of push there. Outside of that, there's no federal guarantee and there's no deferment on this, right? So quite a bit different than PPP on that front, especially on the deferment side of the equation. So the good thing here is that there's more capital potentially depending on your business's needs. The percentage is pretty good. It's a great rate for you to consider if you do want to take on a loan. There's some flexibility in timeline, especially if it's a 10 to 30-year obligation. And really, the things you need to worry about is what is that collateral requirements, right? The good thing is that they should be pretty easy on this front. The goal is to deploy, right? The larger goal of this plan is to get the economy running. So the more friction they add, the less valuable it is for both government, local, and state and federal. So essentially, we're hoping that this will be a pretty easy hurdle to clear. But again, something to keep in the back of your mind, right? And again, could be an element of negotiations or conversations depending on the lenders you go to. So, you know, the terms are a little bit different, but again, still pretty valuable if you need more capital than what you're essentially exposed to or available via the PPP. The EIDL can really help fill that in. So what's a summary of the EIDL? Well, it's quite a bit. There's a larger flexibility of use of capital. That is one of the small advantages you see at the top. The important thing to understand is the loan amount calculation is vague. No one exactly understands how it's going to be applied. Lenders are going to have their own guidance. And we'll also bring on a few lenders, local lenders here who can share a little bit of those details, even as early as today, hopefully by Friday. There's larger loan accessibility here because the calculation is not based off some fixed costs such as monthly payroll. These are low interest rates and favorable terms. There's no loan forgiveness on the core principal, but there is a small caveat, and it's something to actually note for everyone here. Because this is something you can apply for now via the SBA, there's another clause called the EIDL emergency grant, and this is technically up to $10,000. So if you apply for this on that initial link that we had shared, there's an opportunity for you to actually qualify and access $10,000 that can be given to you within 3 days. This is to kind of solve the gap on how long it takes loans to actually come out. The great thing about this is that this is technically a forgivable grant of this $10,000. What's unique about this is that even if you do not qualify for the EIDL loan and they give you this $10,000, it's still forgivable. So it's still something interesting to look into. It's a much smaller amount, but it is something that can help cash flow problems right now. So something to look into when you look at the application. Definitely see whether or not it's valuable for your business's need and recognize it's essentially the only element that is forgivable of the EIDL. Very small amount, but it's again to help cash flow, and it's essentially a safety valve on the EIDL program in case it takes a long time to actually deploy this capital out. So that's kind of the quick summary here. Again, quite a bit of information, quite a bit of different uses and needs, but it's recognizing, right, PPP being the most valuable, that's where you optimize for. EIDL kind of being another secondary lifeline depending on your capital needs for your business. Lastly, and we'll talk through this really briefly, we really want to just discover and talk through what the employee retention payroll credit is. Again, this is an element that does not combine with everything, and that's the important thing, but it might be something you're eligible for in case you did not want to go after either the 7A or 7B or the PPP or EIDL. So just really quickly, the ERP credit here is essentially a refundable credit against payroll taxes for 50% of wages paid by employers during the COVID-19 crisis. The credit is available to employees whose A or 1 operations were fully or partially suspended due to a COVID-19 related shutdown order, or 2, gross receipts declined by more than 50% when compared to the same quarter of 2019. So it gives you a very clear calculation on how to structure this and why, you could essentially get a refundable credit against your payroll taxes, right? But important stuff to recognize here is that, for employers with greater than 100 employees, qualified wages are paid to employees when they're not providing services due to the COVID-19 shutdown. And for eligible employers with 100 or less employees, all wages qualify for the credit. The credit is for the first $10,000 of compensation, including health benefits, paid to an eligible employee between March 13th and December 31st of this year. So, this has a different calculus, right? It's above or less 100 employees. So again, a lot different than the other structures. Everything else was, as long as you're less than 500, you're within the qualifications. And there's a different element of what applies. The other thing important to understand is, can you receive this credit if you take out a PPP loan? The answer is no, right? So the idea is that you cannot double dip on all this stuff here right now, right? You can do both, the 7A and 7B, but if you go with a 7A loan, you do not qualify for this ERP credit. So I just want to note that. So this is really only applies to individuals who for some reason do not want to take advantage of the PPP loan or were not able to qualify for the PPP loan for some type of reason. So essentially, the only gap here right now is, can employers claim the credit now because it will take time for the PPP loan to come through? So there are currently quite a few people who are lobbying for this, and there's still clarity here. Right now, the Treasury Department is evaluating potentially to permit a 60-day grace period to repay such taxes if employers later receive a 7A loan. What does this mean? I know it's a lot of garbled language, but breaking it down in really basics. If the Treasury Department does confirm this, right, that they're willing to give this grace period, then it is worth all of you to apply for this ERP credit because this might be faster to apply to your business, right? And if you then do get a 7A loan, you could then essentially be able to repay or forgive this and give this back because the PPP loan will be much larger and much more valuable. So it's just something to keep in mind in case you need another lever that is important for your business, but this has not been confirmed yet. This is still in this kind of grace period element of debate, and we should learn a lot more over the next few days. So this is a lot here. We've talked through quite a bit in terms of the conversation here. Really, I want to just kind of share with you what you need to do now, right? It's being proactive for loans and services. This is like an advice I gave in really our first and second webinar, and I continue to give. Everything is changing, right? We are still learning and new information is coming out on a daily basis. So the key for each and every one of you is that you should be proactive for loans and services. And how do you do that? Well, A, start preparing for all your applications. You should be able to answer these questions really simply, right? How has COVID-19 impacted you? What value do you offer the community? And how do you use the capital, right? Similarly, make sure you get all your documentation already easy to access that applies for each of these loans when it comes to payroll, rent, loan agreements, etc. Like just capture all that now. It's something you control and you can be ready to be prepped to have the conversation when essentially the floodgates open, right? Because that's essentially what this process is, right? The other thing is be up to date on key dates. So what are the biggest dates for you to understand is PPP is supposed to open this Friday. So in 2 days, you want to make sure, did it open? If not, is there a new date? If so, it did open, where do I apply? And what is that, next step for me? Outside of that, know the key dates for each of these plans, right? So with PPP, June 30th, 2020 needs to be something on the top of your mind for every conversation, because that is when your employee force must be full for you to have the full access to the forgivable element of that loan. And there are quite a few other dates we walked through here, but you should write those down. These are the key elements, and you should essentially calendar these in because these are some of the most essential elements to your business. Next, apply as early as you can, especially when it comes to EIDL. Like it's available, get in the pre-queue, etc. Same thing as I note when PPP is ready and you have enough information, have those conversations quickly, right? And be able to know who you need, what is that next step, who is the next person you need to talk to. Same thing, whenever you talk to anyone, ask them a very simple question at the end of the conversation. Who else should I be speaking to in your network, right? who else could be valuable in this time? Just keep getting more handshake connections up and up so you can get as much information as possible. The more informed you are, the better success you're going to have in terms of maximization of your capital and also ensuring that you're playing within the rules to get the full return, especially the forgivable nature of the PPP. Next is like work with your local SBA and loan expert. There are quite a few individuals here that are here to help. There are quite a few individuals who are willing to take free calls, free emails, etc. They might be overloaded right now, but the truth is get on their calendar now. Even if the call is a week away, right? 2 weeks away, get on their calendar and be able to have that conversation to specifically talk through your business needs as well too. I'm sure there's quite a few exclusive or very unique elements to your business. Have someone who can actually be well prepped to have those conversations, and these SBA and loan experts are perfect for that. Next, like communicate with multiple SBA lenders, right? There are quite a few. You should talk to 2 or 3 at a moment, especially because there's vagueness on how this is actually qualified, especially on the EIDL side as well too. But you should just talk. You should see how much you can qualify for from each lender based off their methodology and their interpretation of the current rules, right? And the current structures. Again, there's no cost to you outside of time, right? And time is probably the most valuable resource you have. And in this case, you should be utilizing it because this is the highest ROI for your time, in my opinion. So at a minimum, I recommend talking to at least 2, if not 3 lenders, and we'll help share that list of who are local SBA lenders, especially when it comes to Folsom. Lastly, like just have excellent documentation. Look like you are the most well-prepared individual where it's so easy to say yes to you, right? These people are overloaded, be able to get through that checklist, be able to have documentation, come in with both physical and soft copy, soft being digital, right? Be able to have that, be able to share that really quickly in a package folder where they can walk through all of those steps. That little bit of extra effort goes a long way, especially when it's a system that's going to be overloaded, right? So the more work and more details you can get into, the best it's going to be. Because you have to recognize is this capital is essentially on a first come, first serve basis, right? Those who can get through the loops fastest are going to be the ones that are going to qualify. The SBA does have some elements of like prioritization, like women-owned businesses is an element to that as well. Minority-owned businesses is an element to that as well. So also pay attention to that guidance to see how you can better support yourself to get to the front of the line if it applies respectively for your business too. But you have to act fast, right? And also what you'll see is that some of this capital might not be able to be deployed instantly, so it might come in tranches. You want to get in as early of a tranche as possible. Expect the unknown, right? If you can do that, right, you'll be a lot better prepared for any of the scenarios that kind of come through. So essentially here, right, is that if you can walk through all these steps, you're going to have a much better success factor when it comes to all of these levels. What you also want to do is that you now have a lot of meaningful details to apply against your business model moving forward. You now have a decent understanding or calculation of what is the total forgivable loan I can get from PPP. You should now be doing calculations forward on what does your cost structure look like with this. Also start doing it with the new data you have on revenue and where revenue is. Does this cover you? Does this actually get you into the green in any manner? Are you still in the red in X, Y, and Z? Because then you fall to the next element. I should be looking at EIDL for additional support then if I cannot get through the PPP. So really be thoughtful of utilizing this information to make meaningful forward calculations, forward projections. The better you do that as well, the stronger your business is going to be, right? And that's really the basic advice here is that control what you control. And you control quite a bit. You control your information, your packaging, your understanding, and the timeline. Focus on that. Once this opens up, right, and you get the other unknown variables through, you'll be much more prepped than 90% of other applicants. And that's the true measure of success in this current scenario right now. So in short, I know that was quite a bit. There's more details. Like I said, it's an 882-page act. There's different guidances coming out. We wanted to at least get you to a larger picture, and we really hope that this kind of webinar offered that. As I noted at the top, if you have specific details and needs for your business as well, please reach out to the Greater Folsom Partnership. Their email here is theteamrecovery@folsompartners.com. We're right now trying to get through like any question that comes in with a 24-hour turnaround. And we also want to make sure that we can update this accordingly so that we can share any of our answers in kind of a digital Q&A wiki, so you can see kind of everything that comes up. More importantly, right, we want to make sure that each and every one of you are best prepped, that the Greater Folsom Partners team will also be sharing all the local lenders who are currently going to be providing SBA support for both PPP and EIDL. They're also going to be able to share more direct resources as we get more guidance from the SBA in-house chambers. After this call, later today, we'll also share both the replay of this video, the slides here in this deck, a one-pager of all the essential documentation and core links. And lastly, what we really want to be able to get to you guys is key resources to speak with as well. So we're building that up, and we should have that probably available by Friday in our next webinar, where we go into more of the grittier details here today. So with that kind of being said, I'm actually going to flip this off real quick, and we do have potentially a couple individuals who can walk through from both the SBA and one of the lenders who can kind of share a little bit of their insight, as they're even more up to date. This information for me was technically from 8 p.m. yesterday. 8 p.m. to today, I'm sure there's even more information coming out. So let me quickly flip through to that, and we can kind of do a extended Q&A, as I know quite a few questions came in. So just bear with me really quickly as I stop sharing this, and let me see. Yeah, I see. Oh, great. So perfect. It looks like we do have Carrie. Carrie, can you unmute yourself by chance from the SBA? Here, I can unmute you. Perfect. No. Oh, good old Zoom. Sorry, one sec, Carrie. I see you here. But for some reason, it is not letting me unmute you. There we go. Hey, Carrie, can you, are you there? Sorry for the technical difficulties. Hey, Carrie, is your audio on by chance?
I'm using my phone for that.
Perfect. We can now hear you. Perfect. So I know, Carrie, if you could share a quick introduction, we could hear you perfectly about kind of what you're focused on, and kind of specifically, I know you have some comments to share on both the EIDL and how it supports the PPP.
Absolutely. Thank you. First of all, thank you for allowing me to join you this morning. We are at the SBA. There are 2,000 of us that are employed regularly across the country. We have 68 district offices. The Sacramento district office is one of those, and we have 9 people working there. And so if you leave a message for us or try to reach us via email, please be patient. We're doing our best to respond to those calls. I'd like to, first of all, help you understand about the EIDL loan program. That is available to all small businesses, and it's offered directly through the SBA at our website, sba.gov. Make sure you do not go to anything with a .com for assistance from the SBA. Those now we're already seeing instances of people trying to commit fraud against small businesses in this difficult time. So please be very wary. If you apply for an SBA EIDL loan, they have no fees associated with them, no prepayment penalties, and you can do that directly online with the SBA. I encourage every small business to apply for one of these loans. It's different than a typical business loan. You're going to go in there and provide them with your revenue information. Over the past year, you're going to provide them with your expenses, and then based on their algorithm, they're going to determine a loan amount for you. You don't have a prepayment penalty. If you choose not to take it, there's no effect on your credit. When they pull that, it doesn't affect it in terms of other lending opportunities. So I strongly encourage you to get in and apply for that. And thank you so much for recognizing that we are facing unprecedented requests for assistance. Typically, a disaster for us is in a region or an area, and this is nationwide. So I appreciate that comment as to our resources. I do want to encourage you, though, we at the agency have become part of a public-private partnership, and that means we are working with other organizations that do loans day in, day out across the country. Behind the scenes, we're using their platform, so we're able to deliver these loans more quickly. As you can imagine, when we first started out 2 weeks ago, our system was crashing. We didn't have the capacity. So our administrator, Carranza, had the wherewithal and thoughtfulness to reach out to other lending professional agencies to assist us with their platform and tools, and we are now able to process the thousands of requests that are coming to the website. So please do make an application. We also had the discussion this morning regarding the $10,000 economic injury disaster loan that's going to be urgent. We are partnering with the Department of Treasury to provide those funds to small businesses as quickly as possible. It's not a grant per se, it's referred to more as a forgivable loan. So if you go in and take that short application on that, you can get those funds. They're projecting that they will be able to be deposited into your account from the Treasury within 3 to 5 days after your loan application is submitted. There are still some credit requirements for everyone that applies for those, whether you're a not-for-profit, a individual sole proprietor, or any other kind of business structure. If you go in and apply for the $10,000 forgivable loan, you are also able to go back and apply for what you qualify up to $2 million for your small business. The EIDL loan for the small business that's for profit, that rate is 3.75%. Those loans, payments on those loans are going to be not required to start until 12 months after you receive the loan. And if you're not for profit, that rate is 2.75%. And those as well, those repayments will not start for up to 12 months. The term of these loans are anywhere from 15 to 30 years. So that portion of the loan above the $10,000 that you may receive is not forgivable, but the loan rate is either 2.75% for not-for-profit, 3.75% for profit, and those terms can be anywhere from 15 to 30 years. So I strongly encourage you to get onto the website for sba.gov and apply for both of those economic injury disaster loans. The second thing I would like to clarify and help you understand is your speaker today was absolutely right. Those Payroll Protection Program loans are going to be offered directly through our SBA lending partners. I have a list of that, and I'll share that with you when we're off the call here today, so you can share that with your members. It's a rather long list, and I first would say to you, if you bank for your business with one of our local banks here in your town in Folsom or wherever you are, most likely they're part of our 7A lending program. Some of our credit unions as well in the region are part of the program, and on Friday they will be receiving direction and information on how to execute on the PPP loans, which are different from EIDL. They will not be participating in the EIDL program. That's direct from SBA, different pool of funding. They will be participating in the PPP loans. Either one of those loans are eligible for a not-for-profit, which is not typical for SBA, but there are some guidelines. And when you go onto the website or speak with your lender, they're going to be able to tell you which designation is not included in the not-for-profit arena. The 501c6, I believe, right now is not included, although I have been on a few calls with different legislators and elected officials in our area, and they are taking up that charge with the next tranche of funding that's coming through Congress. So please, be patient with them, be patient with us. If you fall under that category, please communicate with your elected official that represents you at the federal level and ask them to make that effort to have that included as well. The other note I wanted to say is there's no prepayment penalties. So let's just say that you get one of these loans, either one of them, and things get better more quickly than you expected and you want to pay that loan off, there's no penalty for you doing that. That's kind of my overall topic. Is there any other questions that I didn't address?
No, that was great, Carrie. We really appreciate it. I think, just some of the general questions, maybe really quickly, as we have another speaker right behind you too, but
Sure.
In short, is there, can everyone apply for both the PPP, the EIDL, and the grant? Is that okay if they apply for all three?
Yes, everyone can apply for both the PPP and the EIDL loans, either the one for more than the $10,000, which is a forgivable loan. Very important point here is that you can use the PPP loan for all of the information that you shared in terms of the payroll protection and health insurance. What you don't want to do is when you take that as well as the EIDL loan, you want to make sure that you don't use both loans for the same purpose. So keep that separate. So the EIDL loan can be used for any of your business expenses, and the portion beyond the $10,000 that's not forgivable would be those things that, like working capital, reordering inventory, your rent, if it goes beyond that period of time that the EIDL, the PPP loan was made for. So you can apply for all three of the programs at one time.
Awesome. And then lastly, really quickly, based off what you're hearing, do you believe the PPP will be available this Friday, or what would be your estimates and guts based off the timeline on the PPP being available to access on behalf of small businesses?
So it will be available, but I want to be honest with you. Our lenders are getting this information. You did an excellent job of summarizing, by the way, thank you. Our lenders are getting this information as we speak, and they're getting it as it is today, and things may change by Friday. So when you go speak with your lenders, it's their choice whether or not they decide to participate. There are quite a few lenders that will be participating, and that interest rate for the borrower can be as low as 0.5%. So just keep in mind that there's a lot of lenders that are trying to navigate the same things that you are. And I encourage you to go to your current lender. If they're federally insured lender or credit union, bank or credit union, they can participate in this program. If they're not already signed up with SBA as an SBA lender, they are going to be in the queue, for lack of a better word, to get approved and get access to our systems. So if they're not currently approved, but they say they're going to be approved, it may take them a little longer to get on board because we'll have to get them access to the system that they'll need to use. They'll have to ramp up their employees. I also want to share with you that our district office is trying to respond to, we get over 200 calls a day and we have 7 people to address those. So be patient with us and know that if you go to our district webpage, we're working on right now a web presentation for small businesses that we will be delivering twice a day until we get no more requests for information. And those, you will be able to join those through an Eventbrite notice that'll be on our district calendar. And that location, and I'm going to go slow, and I'm sorry for taking so much time on this, but I know it's really important. It's sba.gov/ca/Sacramento. We'll be loading up those classes. Hopefully on Friday, we'll be able to get the materials together and things loaded up with the webinars starting on Monday or Tuesday. So that's our plan to help address a lot of these questions that we're getting. And again, please be patient with us in terms of responding to phone calls and emails.
Awesome. Thanks so much for that information, Carrie. We really appreciate it. I'll make sure to also follow up with additional information as well, so that everyone has that. And then, as you note, I think you'll have a few additional information on lenders as well. So feel free to share that, and we'll disseminate that for all the members here today.
Absolutely, I will do that. Thank you.
Awesome. Thanks, guys. And we have one more speaker left. I know it's been a little bit over time, but we have another representative of the SBA Business Development Officer, Brian Broderick, who also represents Wells Fargo as well. Brian, are you still with us?
I am, yeah, good morning.
Awesome morning, Brian. How are things on your end, man?
Very, very busy. Lots of questions. You know, unfortunately, not a ton of really solid information, you know, that we have. We're still waiting on the agencies, you know, the guidance from the agencies as to how to utilize the program and disperse funds out to the businesses, as we certainly will be a heavy participant in the program. But absolutely very happy to have a lot of contact with our bank clients, with our non-bank clients, to help them understand as much as we understand at this point, and hopefully give some comfort. You know, we definitely understand that people are scared, and it's a scary time, and there's a lot of uncertainty at what lies ahead. But want everybody to know that we certainly are here to help and plan to get resources to everybody as effectively and efficiently as possible as soon as the agencies give us the direction and allow us to do so.
Got it. And on your end right now, are there any like key tips that you would share with people in terms of how they should be approaching lenders, or like how do they identify their local SBA lenders? Just curious on kind of what you've seen thus far in kind of the community and what you can best kind of offer as advice to kind of local business owners.
Yeah, absolutely. You know, and I think as Carrie may have mentioned, or maybe not, that at the SBA.gov site, that's probably the best resource for anybody looking for information, and they should have a list of lenders. I think from what I heard, they expect 800 banks plus to be able to participate in the program. It is the same terms for every borrower and through every institution, as far as I understand. So going to your own lender is always a good place to start if you've got a relationship with somebody, but you don't have to go through your own lender. Something to keep in mind as well, as you mentioned, it was just rolled out Friday. So tons of progress has been made by the SBA to get to the point where we're at today. It's pretty impressive in terms of what they've been able to do to mobilize around this. But keep in mind that they've also got to distribute this to the bank, and each lender is going to have to put a program in place for processing. So I think you're going to see different lenders coming online at different times, being able to set up a program. You know, if the program's open on April 3rd, I don't know that it necessarily means that every lender is going to have a program in place. We are certainly working on our end at Wells Fargo to do that and get a program in place, but we definitely want to have it right, not have it fast. So as soon as possible, we'll be having a link, I believe, that you can apply through at the bank. Hopefully that will be April 3rd, and we'll certainly be reaching out and notifying people when it's available. But I think, you know, all the information that you provided this morning was very, very good, very helpful in terms of understanding the overview of the program. It's not 100% clear what documentation is going to be required. So I think getting all of your ducks in a row, or at least knowing where that information is going to have people positioned to be able to provide that information in a timely manner and get their application in a complete manner, so that whatever lender you apply through is able to quickly and efficiently process your information. The payroll, it sounds like, is one of the most important pieces, and it's not known at this point if you'll need to provide tax returns and other information. But again, I would have personal taxes, business taxes, you know, maybe even prepare a personal financial statement, and have at least those documents along with your payroll information ready, as those are typically things that you would need when applying for a loan. Although at this point, it's not clear exactly what will be needed.
Yeah, no, I mean, that's great advice. As you know, just the more the merrier right now, as we understand the details, as we figure out kind of this element through. So the more documented, I think that process is really great. And also just time to recount, as you note, you know, every lender is going to have their own different process. They're going to be able to get guidance, and, you know, you're going to see that different institutions are going to be able to have maybe a digitally sophisticated strategy ready as early as April 3rd, but realistically, it could range from 1 to 2 weeks. So this is also the other additional importance to be communicating with your primary lender that you're already working with, but also understanding what the lending community is doing too. And I think that's a really great point that Brian's bringing up. Brian, anything else you want to share or any other key information that you think is important for our audience today?
Maybe just to echo what you said earlier, that there is still a lot of unknown, and it's very important to know everything if possible before making any assumptions on what is going to happen. So as soon as the banks get guidance from the agency and the programs rolled out and the facts are all straight, that's really when you should be making the decisions. There's nothing wrong with getting prepared for and learning as much as you can, but know that things could change between now and when everything goes live. So keep that in mind. We're being very careful not to represent anything as fact at this point, again, because we are still waiting for the ultimate guidance from the SBA. So anybody out there that's telling you that they know is not telling you, I don't want to say not telling you the truth, but it could be misleading in terms of what actually comes down the pipe. So, once the guidance from the SBA is delivered, we can deliver the facts and move on from there.
Awesome. Thanks so much for the time, Brian. Incredibly helpful as well, Carrie. We really appreciate you guys sharing directly the information of the community. With that kind of being said, guys, we kind of will wrap up as I know we're a little over time. But in short, I quickly just shared 2 documents within the chat. We'll also follow up via email with this. But essentially, first is a documentation and guidance that came directly from the U.S. Chamber in regard to the current CARES Act and how it applies to small businesses. Again, this is essentially the official documentation, and it gives you a little bit more information on the calculations and structures that apply. So definitely worth reviewing that. Separately, I also shared a sample of what the PPP Paycheck Protection Program application may look like. This is, again, directly from the SBA.gov website. It's just a sample, but again, just giving you a little bit of knowledge of what is the information and what the process will be. So just take a look and make sure that you have everything. I think really the key here is to take away is get your information and your ducks in a row, be able to understand the key dates, be proactive and check every morning because this is probably the most critical element for your business. And last and most importantly, communicate with your peers, right? That's the other really important thing about Compass is that we all have other interesting resources in our network. Some might have good lender relationships with different banks. If you hear stuff that's going well, share with your community so that we can all access this better. And I think that's the real important thing here is that we hope that we're able to guide each and every one of you to make better business decisions. But we also hope together as a community that we're helping lift everyone together. So really, that's the goal of the entire Compass series. As just a quick shout out, we're going to have our next webinar on Friday where we'll dive in even more into all these details. We hope there's more clarification. But in short, really what we hope is that send in your questions as well. We really want to make sure we're answering on your behalf. And if there's anything else you'd like to see in this, we'd love feedback. So with that kind of being said, I just want to say thank you all for joining. This was incredibly great. Thank you again, Carrie and Brian, for joining us as well today. And thank you both to the Greater Folsom Partnership team, Granite City Coworking and Tribe for kind of putting this together.